Welcome to our breakdown of HealthEquity's Q2 earnings. Look, this was one of those quarters that really makes you sit up and pay attention. They didn't just beat the numbers, they actually changed the entire story for the stock going forward. Let's dig in.
Right out of the gate, management dropped this number on the call, a record 71% gross margin. That set an incredibly bullish tone. This wasn't just a good quarter, it was a record breaker for profitability. And you know what? The market loved it. The stock jumped over 7% right after.
And here's the headline number that really turned heads. A massive 17.4% earnings beat. A surprise that big isn't just a rounding error, It screams that there's some serious operational power here that analysts just hadn't factored into their models.
Okay, so let's get into the nitty-gritty. What exactly powered this incredible quarter?
It was a clean sweep. HealthEquity sailed past expectations on both revenue and earnings. Revenue came in just shy of $326 million. That's up 9% from last year. But the real story is that EPS number, $1.08. That's a 26% jump. Just fantastic.
So where did that growth come from? Well, the star of the show, hands down, was custodial revenue, up 15% to a new record. This was just supercharged by a really healthy 3.5% yield on the cash sitting in their health savings accounts. Now, that service revenue number might look kind of flat, but trust me, there's a really interesting efficiency story hiding in there.
The scale we're talking about here is just immense. Total HSA assets climbed 12% to over $33 billion. But look at this. Invested assets are up 23%. That is a huge deal. It tells you people aren't just using these accounts as checking accounts. They're actively investing for the long term. And that creates much, much stickier customers.
So what was the magic formula here? It wasn't just one thing. Really, the story boils down to two huge forces, two engines working together perfectly.
And this slide just lays it out beautifully. On one side, you have razor-sharp internal execution. They're using AI for claims, they're pushing their mobile app, they're crushing fraud. And get this, they're providing better service with 9% fewer people than a year ago. That's impressive. Then, on the other side, bam, a massive legislative win just falls into their lap, opening up a whole new market.
And this new law is a true game changer. Management even called it the biggest thing to happen to HSAs in 20 years. Starting in 2026, it opens the door for maybe 3 to 4 million new families to get an HSA. This isn't just a one-time boost, folks. This is a structural tailwind that's going to be blowing for years.
So what does this all mean for the future? Well, management isn't just sitting back and counting their money. They're actually using this strength to make the business even stronger and safer for the long haul. And here's the proof in the pudding. They raised their full-year guidance across the board. They're now looking at revenue over $1.3 billion and earnings per share getting close to $4. You don't make upgrades like that unless you are extremely confident that the good times are going to keep rolling.
This is a really smart move. Management is protecting that golden goose, the custodial revenue. They're basically using financial tools to lock in a yield of over 4% on $1.2 billion of future cash. What does that mean for you? It means they've created a ton of earning stability, even if the Fed starts cutting interest rates down the road.
Okay, so we've got a fantastic quarter in the books. We've got a brilliant strategy playing out. So what's our call? Where does the stock go from here? When you put it all together, the numbers, the flawless execution, this incredible legislative gift, for us, the path forward is pretty darn clear. We're initiating our coverage with an outperform rating. It's simple, really. HealthEquity is firing on all cylinders. You've got the internal engine driving up margins, and you have this huge external catalyst providing a growth tailwind for years. We see a clear runway for them to keep leading this market and for the stock to continue climbing. So let's talk about a potential trade idea. We're calling it the HSA land grab. The simple play, of course, is just to own HealthEquity stock. You're betting on the platform itself. But if you want to get a little more tactical, you could also buy a small basket of the health insurers that are going to get a flood of new customers thanks to this law. The whole idea is to bet on the entire ecosystem that's about to be built out. You own the toll road and you own some of the cars driving on it.
As always, this is not financial advice.